Turning to the charts, we can see that BTC is sitting at around 30k, which is admittedly below the support levels I suspected we could fall to last week. As scary as this looks, I'll remind you that this marks the 7th straight week of red for BTC, and I think it's been something like a decade since BTC has seen this long of a decline. I really want to say that a recovery rally is imminent, but I must confess that what I'm currently seeing looks more like a bear flag that could take BTC to the low 20Ks. Alternatively, we could see a small relief rally to the upside to around 33 or 34K, where BTC is likely to experience lots of resistance. Last week's top-performing cryptocurrencies were MakerDAO, the decentralized Fei stablecoin, the centralized TrueUSD stablecoin, the decentralized DAI stablecoin, and the centralized USDC stablecoin. Talk about clutching at straws. Starting with MakerDAO, the Maker token went on a tear after Terra collapsed, and this is simply because believers in decentralized stablecoins move their money into the next best thing, which is MakerDAO. Not surprisingly, Maker's recent rally announced nothing more than a blip on its long-term price charts. Note that DeFi tokens of all kinds have been lagging behind the rest of the crypto market over the last year, which is quite unfortunate. Next up, we have the Fei stablecoin, which, is a stablecoin, so it didn't really pump per se. As I just mentioned, Fei is a decentralized stablecoin, and it seems it received some of Terra's mercenary capital as well. It's the same story with TrueUSD, DAI, and USDC, and I will note that it's interesting to see 50-50 representation of decentralized and centralized stablecoins on this list, even though it's somewhat arbitrary. It's even more interesting to see which decentralized stablecoins have maintained their peg despite the recent dip. The one that caught my eye the most was Magic Internet Money, because many Abracadabra users were using interest-bearing UST from Anchor Protocol as collateral to mint MIM. This just goes to show that decentralized stablecoins aren't all bad, and they're definitely needed because decentralization isn't just important at the blockchain layer. More about that in an upcoming video.